Hello, everyone. Thank you so much for joining us today. Thank you, Taufik and Datin Azleen. So I'd like to welcome everyone to the second session of this SIVC 2021 event. And following up from Tan Sri Abdul Wahid's insightful discussion earlier on, Islamic finance and sustainability is the way forward. What I hope we'll get to in our session is to delve deeper into how the financial industry will actually address social and environmental issues and what the role and commitment of the financial industry is to those two very important areas. So as mentioned, my name is Bertram Lai. I'm the Group Head of Research and ESG for CGS-CIMB. And I'm very honored today to be able to introduce to our audience our highly distinguished panelists. So if I could, I'll start with Taufik Iskandar. He is the CIO of Penjana Capital. Now, Penjana Capital was incorporated in July 2020 as part of the Government of Malaysia's initiative to accelerate the development of a future innovation economy. Its main role is to stimulate the economy through investment in innovative and fast-growing businesses. Prior to his appointment, Taufik was in Kampulan Wang Persaraan di Perbankan as the Director of Research. So he's armed with 14 years of experience in the fund management business, and he has a very deep commitment to the development of viable as well as a vibrant capital market in Malaysia. Turning now to Datin Azleen Osman Rani. She is the Director at the Institute for Capital Markets Research Malaysia, ICMR. ICMR is an independent think tank, affiliate of the Securities Commission. Now, Malaysia set up to study structural trends and developments affecting the overall market development. Prior to joining ICMR, Datin Azleen was heading the research team of a buy-side investment house, ValueCap, where her core focus was on equity market strategy and outlook, ESG integration, and thematic research. Her research interests now focus on various topics which have risen in importance on the policymakers' agenda, including sustainable finance, financial inclusion, alternative financing, and human capital development. Okay, so I would like to now, before we actually start, maybe to share some charts to lay the foundations about the rise of ESG as an investment theme, and maybe to really anchor our discussion. Could you share the slides, please? Okay, could we go to the first chart, please? Okay, thank you very much. So what we're seeing here is what was referred to in the previous session, which is the growth of funds managed under United Nations Principles for Responsible Investing. As you can see, that's been growing extremely strongly. So it's something that we know we've been talking about for a couple of decades now, but it's something which has really come to the fore in the past few years. Okay, if we take a look at the amount of assets under management managed under UNPRI, we're talking about 100 trillion US dollars AUM now. The lines that you see here also show the number of signatories to the UNPRI. And as mentioned in the previous session, this has now reached over 3,000 signatories and is growing almost exponentially. Next slide, please. So we know that part of what's been driving ESG has been the market appetite for it. The end clients are definitely demanding that investors and business take account of ESG factors. The other thing that's driving it is regulation. And as you can see from this chart, the amount of regulation which requires businesses to report on ESG, requires investors to report on ESG, has risen pretty much exponentially and has peaked in 2018. And the reason for that rise in regulation has been many investors have jumped on a bandwagon of ESG, and hence that has resulted in a wave of what we would call greenwashing, where they hold out ESG principles, but the underlying details of what they are doing is not quite ESG. So we've seen this rise in regulation. Certain markets, such as Europe, have therefore seen a drop-off in the amount of AUM. But it's this regulation which is also driving the amount of assets being managed under ESG principles in other markets outside of Europe. Could we go to the next slide, please? If we take a look at what's happened throughout the pandemic, is that the interest in ESG and the amount of funds flowing into ESG managed assets has also continued to be very strong. In fact, the head of research of our research partner in Europe actually said that ESG is really the only game in town. So definitely we know that internationally ESG is driving a lot of capital market considerations. Next slide, please. If we take a look at how the investments have actually performed, we can see that ESG factors actually does drive fund relative outperformance. So the gray bars basically show performance in the first quarter of 2020. And the blue bars actually show performance since the end of the first quarter of 2020. So you can see that ESG funds have outperformed in Europe. In US, they have slightly underperformed, but globally, they have outperformed as well. The final chart I'd like to just mention is, if we could move to the next slide, please, is this one, which actually shows the amount of assets that are actually managed under sustainable, responsible investing principles. So as I mentioned, in Europe, it's peaked at over 50% and has come down since those regulations have been driving better governance of those areas. In the United States, it has been growing and continues to grow quite rapidly, and is now standing at about a quarter of assets. In Asia, not so much. The most recent data that we have available across the whole of Asia goes back to 2016, and that shows less than 1% of assets. Now, definitely there's been great advances since then, but I think we can all look at this data and say that, you know, over the coming decades, the amount of funds managed under ESG in Asia is going to grow very quickly relative to the overall market. Okay, thank you very much for the slides. So turning back to our panel. So to help us understand more about how this rise in ESG and pandemic have impacted Malaysia, the Malaysian economy and the finance industry, I'd like to turn to our panelists to benefit from their wisdom and insight. So firstly, Taufik, if I could address the first question to you. So in the early days of the COVID-19 pandemic, all the news was bad, uncertainty was extraordinary, and the downside seemed unlimited, right? Of course, what actually happened in the year since was very different. We do know that the world has changed. Our lives have been transformed, and to a certain extent, our economies and fortunes of our businesses. So from your point of view, how does COVID-19 affect Malaysia and its capital markets industry as a whole?
Thank you very much, Bertram. Thank you to the host for inviting me to speak today. Let me take this question and set the context of our exchanges today. Our economy contracted 5.6% for the full year of 2020, second weakest after 7.4% contraction we've seen in 1998. The economy plunged 17.1% in second quarter, right after pandemic, 2.7% in the third quarter, and 3.4% in the last quarter of last year. Unemployment rate was at 4.6% for the whole year last year, hitting the highest point of 5.3% in May. So the 2020 recession was not caused by cyclical unemployment and deficient demand. It was COVID-induced sudden stop of economic activity that led to rising unemployment. So there is no deficient aggregate demand currently. On the supply side, COVID accelerated technological and supply chain disruption means no stability in the supply side. And on top of these, there are structural changes going on in the economy. The pandemic highlights the interrelations between our natural and social systems. Societal resilience depends on a resilient environmental support systems. So when we upset the environment, when we upset the balance of environment, society suffers and eventually economy collapses. So I love reading history. And one example comes to mind. The Four Pairs campaign, if you recall, during the Cultural Revolution in China, I think it's 1958. The campaign began in 1958 to eliminate rats, flies, mosquitoes, and sparrows. But the extermination of sparrows in particular resulted in severe ecological imbalance, being one of the causes of the Great Chinese Famine. We need sparrows to eat insects that destroys crops. So as a result of the absence of sparrows, locust populations ballooned, rice yields collapsed, substantially decreased. And it was estimated about 15 to 45 million people died of starvation during a period we call Great Chinese Famine, 1958 to about 1962. So what we learned here is that we need to protect biodiversity. So lack of protections on biodiversity and food systems makes zoonotic diseases more likely, makes more virus outbreaks more likely, like what Tan Sri Wahid raised earlier. And another point that I wish to highlight is that there is inherent social inequality. Inherent social inequalities appear to influence the ability to cope with the challenges that COVID brings. At national level, we have heard about vaccine inequality between developed and emerging countries. We have also heard about K-shaped recovery, where different social groups experience different rates of recovery. And we have seen how the policymakers introduce policy support. And as a result of this policy support, we have seen a financial asset price inflation. We have also seen consumer price inflation as a result of disruption in goods and services supply chain. But we have not experienced a meaningful, uniform, and broad-based wage inflation. So we know we need technology solutions to fight this pandemic. And we need next generation of climate innovation to address environmental risks. But we cannot let any segment of society to be left behind. So what we got after this pandemic is that capital, both money and technology, gains more prominence over other factors, in particular labor. And I hope we will not neglect land as well, our planet. So that's the truth. So because capital gains more prominence, I hope we must use this capital as an instrument of change. So it's time to change and bring back the balance. So that is what we heard so far. Over to you.
Okay, thank you. Thank you. That's really insightful. I take your point that it wasn't a demand issue, but really a supply disruption caused, and as a result, capital has become much more important, and how that's applied is, I guess, really magnified by the social inequality. So how the capital market addresses these social inequalities is going to be a key factor going forward. So turning now, I guess, to your area of responsibility. So what other specific strategies and actions of Penjana Capital in addressing some of these issues that you've brought up? And I mean, is this geared towards an economic recovery, or is it going to be more geared to, I guess, a restructuring of how this should work, the markets should work going forward?
So I wanted to bring the attention to the power of capital. And I think the government, being our stakeholder for Penjana Capital, understands the importance of that ownership of assets and capital and how we can effect change. So in the past, most feared that government and public asset owners would want to be active owners. But the main problem now, Bertram, is rather that they are passive owners. Some are looking for short-term return. Warren Buffett raised this. Jamie Dimon and Larry Fink talk about short-termism in financial markets. And this is just my prejudicial view. I think excessive focus on short-term return became long-term thinking and sound decisions. So Penjana Capital has a part to play. It was established to accelerate, like you mentioned, Malaysia's economic recovery. So we intend to catalyze the supply of growth and patient capital and reorient the capital for innovative businesses. So capital as an agent of change. Only through a set of economic incentives and investment can we shift behaviors. As a result of COVID, we expect increased funding in many areas. Technology companies as well as technology-enabled business models are seeing rapid acceleration in demand. So Penjana Capital looks for longer term, and we would like to support companies and business models that are likely to thrive in a new normal post-pandemic. So fintech companies, for example, that focus on underserved verticals like social protection, insurance, as well as wealth management, they are on our radar. Emerging technologies like artificial intelligence in sectors with secular drivers such as edutech and health tech are important. Given countries' commitment to facilitate transition to green economy, we also look to invest in agri-tech and food tech, especially in alternatives to traditional meat. So we favor a relentless focus on the underlying themes that will drive the society and the economy over years, rather than the market facts that have shelf life over just days and months. So in addition to my point earlier, the government through Ministry of Finance appreciates the importance and scale of corporate socialization that could take place through government investment vehicles and pension funds. I'm sure focus will be given on how best to optimize government's balance sheet and investment funds to drive ownership in strategic sectors, as well as to drive development of new verticals, new industry verticals post-pandemic. Like Penjana Capital, the approach is that we can scale capital for good and to future-proof the economy. Like I said earlier, I like reading history, and one particular individual came to mind. I think, Bertram, you would know, Karl Polanyi, right? One of the great economists. He mentioned it has always been and always will be the visible hand of the state that builds and maintains the road to freedom and the road to free market. And I would like to add the road to growth. So state has played its part and give a signal that we should change towards having more inclusive, equitable, and more sustainable growth path for the economy. So yeah, I guess the capital market will play its part later on.
Yeah. Thank you for that. I really feel your passion for this and the insight. It's interesting. I love how you mirror. You're a student of history, and you use that in order to look forward for the long term. So thank you very much for that. Turning to Datin Nazleen now, I guess looking again at this crisis brought by the pandemic. So, we saw actually, what Taufik referred to, we saw a great dispersion between the high performing sectors, technology, etc., actually widening their lead over lagging industries. And if we look at what's driving the economy today, this just seems to be accelerating. Right, everything seems to be speeding up along many of those same trends. So, I guess areas like healthcare, medical technology, e-commerce are all set to benefit. So, how do you see this acceleration of trends, along with these demand aftershocks, changing capital markets going forward?
Thank you, Bertram, and also thank you to the organizers of this conference. I agree with you. There are these underlying trends which are accelerating, basically changing the markets of the future. And I think you've also mentioned earlier that COVID-19 is going to bring about many permanent changes to the way we live, we work, and also do business. And I would like to echo Taufik's comment on leveraging on the power of capital and also what we can already see through the private market space. These will be sort of the sectors that are not only going to be able to survive, but also thrive in a post-pandemic environment. So you can use the private market space as a leading indicator in terms of the kind of sectors that capital is sort of reallocating towards. Like Taufik mentioned, because of advancements in technology, there's a lot more capital that are looking into fintech solutions which deal with financial inclusion, health tech, food security. And to me, these are positive developments, primarily because they are investments which are going toward finding solutions for sustainability and climate challenges that we're faced with today. So I think the bigger picture and aligning it to our discussion topic today, which is on sustainability, Bertram, you mentioned in your slides earlier that linking it back to sustainability, it's probably the only game in town moving forward because of the growth and momentum and demand. ICMR itself, we conducted, interestingly, a study on the asset management industry back in 2019, and to really look at the structural trends which are going to affect the asset management industry over the next 5 years. And one critical pillar that we were looking at was a shift to study the shifts in investor preferences in the next 5 years. And based on the results survey, it was clearly highlighted that the number one shift that the asset managers see coming from their investors themselves was going to be a push toward SRI funds. So this has profound implications for Malaysia's capital market industry. But I think we should also not just look at it from the perspective of where capital is going to flow into, or the potential returns of the segment, but also from the perspective of the ESG risks, this incorporation of ESG from a risk perspective. The reason is because I think we can really see today that markets can be very unforgiving when it comes to looking at ESG related news. ESG risks are just too big to ignore, and financial industry players and businesses have to take into account these ESG risks. They can be detrimental to the longer term value of companies in terms of reputational damage, loss of revenue, ban of imports, which do not just affect the companies themselves or the investors holding on to these companies, but also having a more macro sort of implication to it. So today, I think our conversation is important not only from the perspective of the role that capital markets play or the role that financial industry players have to play in terms of moving the agenda forward for sustainability and SGD financing. But I think COVID-19 really presents us with a unique, once-in-a-lifetime opportunity to really take a step back and really ask ourselves the more fundamental questions on whether this model that we're in terms of the way capital markets are working, whether it really is currently serving the needs of the economy, the environment, and society. And I agree with Taufik. I mean, the COVID-19 has really brought to fore the structural inequities in the system that we really have, as whether we're a financial industry player, whether we're the business, whether we're investor, asset owner, or policymaker, regulators should really look at it from a bigger picture perspective.
I see. I like your take on that. Really, what the market is looking for is solutions for sustainability. I think that really is key. So I think you've already touched on this a little bit, but I'd like to just delve a little bit further. So you've talked about how decision making needs to factor in these risks from a sustainability side, and how funds themselves need to factor these issues in. But I guess how do you actually see that happening practically in terms of the integration of sustainability into decision making today amongst the capital market players? And I'll give you, I guess, a little bit of context from my point of view, which is, often the reaction to to these forces is that, well, that just means the profitable polluting assets will move into private capital hands and out of the public capital markets. So I guess how are decision makers within the capital markets industry right now dealing with integrating all of these things into all the decisions that they need to make?
Yeah, Bertram. I mean, when we speak about integration, there's so many different working parts to it, right? I think you are probably in a much better position to speak on in terms of integration of ESG factors into how we value companies. And I think that will be a big component of how we push this agenda forward. Whether or not it's through constructive dialogues with the companies themselves, or whether or not it's through stewardship activities. There are very different strategies that can be deployed. So, I mean, you mentioned a little bit about looking at, whether capital is moving to the private market space. I think I would echo Tan Sri Wahid's statement just now. Sustainability is a universal issue. It will affect everyone, whether or not you're a company within the public market space or within the private market space. You're going to eventually have to take into account of sustainability, not as a CSR agenda or something on the periphery, but clearly it has to be incorporated as core to the business strategy themselves, right? So I would also relate this to Tan Sri Wahid's earlier point about looking at integration issues from a broader perspective. I think currently, I don't know, I was in the industry looking at the integration of ESG factors into companies' valuations maybe 5 to 6 years ago. And the conversation then was, will there be a trade-off in terms of financial returns when you incorporate some of these ESG factors into the company's valuation? I hope that the conversation has moved beyond those kind of questions, because we have reached, especially with COVID-19, we've reached sort of a critical turning point in terms of aligning ESG into the broader SDG goals. I think that is the move forward. We have to look at it in a more holistic perspective. So how does the EES factors, for instance, under the ESG financing, economic, environmental, social factors, align with the broader 17 SDG goals? Primarily because SDG provides us with the most comprehensive blueprint that looks at all the P's, right? The P's: prosperity, people, for the people, and for the planet. So this was also mentioned by Tan Sri Wahid in terms of the journey we're in. He thinks that, eventually, even when you look at alcohol companies, they are going to be deemed as unsustainable when you align them to the SDG goals, because it's not in alignment with, say, SDG 3 of good health. So this is clearly a shift that we have to make from a financial industry perspective, from a broader perspective, looking at how we aligned it to the broader SDG goals. And then you have the perspective of today's conference topic of Islamic finance. How do we look at the Islamic finance principles and then align them into the core principles, the broader goals of SDG? And how do we complement them with the Maqasid al-Shariah, the core principles underlying Islamic financing? So the first step, I think, for us as financial industry players, capital market actors, is that we do need to acknowledge that this is an ambitious undertaking. There are significant complexities, and the different indicators and the goals are very interconnected when you take ESG, SRI, Islamic finance principles. So just take SDG, you have 17 SDG goals. And then you break it down, you have 169 targets. You have 232 indicators to solve the most diverse problems in the world in a sustainable way. So, but again, I would say we've reached that point of inflection where the next call to action would be the need to look at integration in a more holistic way. because the reason is capital markets do not work in isolation. It should be linked to the real economy. It should be solving real problems. And my goodness, we have such big problems that we are faced with today. So because of this, COVID-19, what it's done is really given us a huge wake-up call. It's laid bare the structural weaknesses in our system. It's like we can look at how the capital markets are not serving all segments of society. So from an integration perspective, I do acknowledge that the financial industry always speaks about challenges in terms of lack of data, lack of harmonization issues, which I think the regulators and policymakers are clearly working hard on in terms of building a taxonomy around this. But we really ourselves should take a step back and ask if achieving progress towards sustainability and climate change should only be a top-down regulatory compliance-based approach. You mentioned just now, the rise of regulations have just led to more greenwashing activities. And why I say this is also these other structural changes that we're seeing right now. There are new forms of activism coming into place, and they don't wait for what's going to be disclosed in impact reports, sustainability reports, integrated reports. They go to the ground, they hold the companies and institutions accountable, and it gets published in the media. And we know how fast news travels, especially bad news, right? So, and there's also so many other trends you can already see. There's ExxonMobil just had to basically include, I think, about 3 activist shareholders into their boards to fight for climate change. So really, I think we need to consider a more proactive approach and not just wait for regulators and policymakers to come up with the taxonomy and think of ways of how to integrate it, right? For instance, given the complexities, have we considered other tools, technologies, which allows us to dig deeper beyond what's disclosed in our annual reports or sustainability reports, using AI, machine learning capabilities to look at fast-flowing, vast amounts of unstructured data to give a more holistic picture of the ESG risk. Clearly, the reports will still be your primary source of information. So ICMR, I think for us, you won't find it on our website because we are working on the report, which is going to be included in an edited book on financing sustainable development. But internally, we built a customized algorithm to sieve through vast amounts of data and information coming through 500, 600 reports. And what we did was we used sort of dimensional reductional methodologies such as principal component analysis to reduce the focus of these large inputs, which are highly complex, very interconnected, in order to measure the focus of SDG financing across the 17 different goals. So bottom line is, Bertram, I think I would just like to emphasize that these are not normal times. So we also need to think of newer, innovative approaches to addressing these problems, not in an incremental way.
Wow, thank you. So once again, I can see the passion and the conviction when you talk about some of these issues. And I would completely agree. I think there's a certain amount of number of people that have been looking at things like the integrated accounts, waiting for that to lead to sort of, I guess, full adoption across the board. But as you mentioned, I think the media and the social aspects are definitely pushing the capital markets a lot harder, and I think a more proactive approach, which is being led in practicality by a couple of quite prominent people. It's definitely the way forward. So I think a very strong call to action there. I think so. Thank you for that. I'd like to turn back to Taufik now, because Datin Nazlin, you've already mentioned climate change, and I think we've been very short-term focused so far on COVID-19. So Looking specifically at climate change and how, policy setting in Malaysia, the enactment of laws, formulation and implementation of plans, etc. You mentioned the importance of biodiversity in our environment as well. But I guess there's a lot to cover here, and given the whole focus has been on COVID recovery in the near term, I guess I'd like to ask you if you see any apparent shortcomings, or in terms of the development of climate-related monitoring or programs or the relevant laws within Malaysia.
Right, Bertram, you're right to suggest mitigating climate risk is the real agenda of today. I mean, one could argue that modern day equivalent of space race is a race to carbon net zero, right? By 2050, everyone talks about it. And at the government level, we have seen there is a commitment at the governmental level to drive societal shifts required to achieve a wholesale transformation. We need regulations to changes in supply. We need subsidies to drive demand. We need vast fiscal spending to create the necessary infrastructure required to transition the economy to a greener, more sustainable economy in the future. So, and mitigating climate risk takes on more urgency, as pandemic has shown how these large non-financial events can actually hurt growth and even future capacity for growth, as well as returns if you are in financial markets. But from merely a source of negative externality, I think the issue now moves towards it becoming a source of opportunities and innovation. So this is just my view, Bertram. I was told that this is supposed to be like an exchange, a conversation. So I'll try to be radical here, right? My 2 cents is governments all over the world are not good at pricing negative externalities. You look in Malaysia, Pollution Act, it was 100,000 fine in 1970. It was moved to 500, and eventually and recently it was moved to 15 million fine for scheduled waste pollution. Even that, some argue, is insufficient. So what is the correct so-called deterrence, right? To deter people and also to appreciate the environmental risk. In capital market yesterday, I was attending one of the ESG webinars. And again, like you mentioned, the issue was is greenwashing. So if you are in a normal physical goods market, if you have a misrepresentation, you will be fined. If there is a mis-selling of products, you will be fined. Are we going to take that route as well? If, let's say, another asset manager is suddenly greenwashing, and it's proven that they're actually not abiding to a certain standard threshold that was set by regulators, can we fine them? Can investors actually seek legal recourse? So again, like I said, are we going to take that route? But if you ask me, I think the focus should be on the opportunities that this risk eventually can present, right? So I think the government is also taking that route. I mean, the focus is having that policy document where we can look at how Malaysia in particular can actually prepare itself and can leverage on the opportunities that this race to carbon net zero offers to Malaysia. So I mean, I think our policy document, a recent policy document would be Shared Prosperity Vision 2030. It underscores the country's commitment to make Malaysia a green economy. We have 15 key economic growth areas. Green economy was mentioned, centered around smart city and circular economy. We have smart farming as one of the key growth areas. We also have renewable energy. The government committed to have 20% of the electricity generation to come from renewable energy by 2025. So commitment-wise, I think the government is quite clear. But the issue is, how do we want to drive society towards that? And this is where I think we need to play its part, especially the capital market, because in my view, economic incentives are key to change the behavior of society and businesses. So now you ask me, what are the challenges for the government, right? I think, like I said, if economic incentives are the most effective tool, we have a challenge, because our economic and financial capacity is diminished, more so after pandemic and compounded by climate change. Malaysia being the second largest oil and natural gas producer in Southeast Asia, the country, face a loss of GDP, government revenue, and even export receipts if we do not diversify economic reliance to withstand the downside risk. As everyone moves towards, or everyone moves away from fossil fuels, right? And that's where our, fiscal capacity and government revenue is dependent on. And post-COVID phase, we see many countries with depleted fiscal and high deficit, and Malaysia is no exception. So why this is a challenge? Because weaker balance sheet will diminish our capacity to pursue innovation and weaken our prospect for climate change and socio-economic policy reforms, because the capacity is not there. So second issue that we have, and I think this is quite important, is the issue of trust. Globally, this is an issue. The present trust deficit, everyone talks about it, makes it challenging to govern productively and effect change successfully. So the reason is, when you have this deficit in trust, a deficit in trust, I'm afraid the government will be more short-termist. Like I said, eventually the government seems to be okay, taking the higher route, focus on the long term. Most of the government, even the new administration in the US, is the most capitalist government in the world, and yet they're talking about inequitable, inclusive, sustainable growth. But if everyone is turning more populist and focusing on short term, and private market also, capital market is also short term, then no one is addressing this, right? I mean, just give a case in point, right? We are paying 30, 40 times for e-commerce in a public capital market, whereas we pay single digit for precision medicine companies who actually try to solve diabetic and cancer. I mean, where is the priority there, right? I mean, I'm just giving a thought whether the capital market has shifted its behavior. So this is where I tried to allude earlier. I mean, the real issue of short-termism in the capital market would potentially hinder our response to mitigating climate risk and climate change. So so there you go. There are two key challenges here.
No, I really like your take. I agree with you. Governments are not very good at pricing externalities. And your hope that the capital markets will focus on opportunities and innovation and therefore correctly price these externalities, I think is admirable, and hence your role at Penjana Capital. But I take it there are great challenges in terms of the capital markets not being short-term and focusing on those externalities as well. So bringing about those changes, in terms of capital market behavior, do you really think that is a market opportunity that will bring that change? Or you would actually need direct regulation to bring that change about? Or is it going to be a mixture of both?
Bertram, like I said, I think we all are, capitalists. I mean, secretly, right? We all are driven by money, like I said. So I believe in economic incentive, i.e. opportunity here to make money. But if participants genuinely believe, addressing this climate risk opens up, new markets, addressable market for the businesses, they will buy the share, and we will actually subscribe to private placement, and we will actually ensure the capital will be used for that. So if you ask me, setting high, disclosure requirement, this regulatory approach, yes, that's fine. I think that is needed. That is foundational, but it will not shape behavior in meaningful way. So that is just my, again, 2 cents.
Yeah, no, it's interesting.
So if you ask me how to do that, so you need the asset owners. We start with the public asset owners, right? The sovereign wealth fund, the pension funds. They have to shape their behavior. They have to shape their mindset. How often do we hear them talking about these secular trends in their strategy? How often do we hear them talking about compounded returns, right? We all know that, the real investor would look at compounded returns. But how often do we talk about 10-year targets or 10-year compounded returns? We still announce our result based on year-on-year number. I mean, at best, it's 3 years. But when these issues can only be resolved, I think, more than 5 years, right? A real breakthrough will not come within 2 years, right? So again, we need to shape our behaviors here. And to shape behavior is all about incentive. So perhaps, we will start from that.
Okay, thank you very much. Okay, so I'd just like to turn back to Datin Azleen now, and really, you mentioned earlier about. Oh,
Bertram,
sorry.
sorry. I'm just going to add a point to Taufik's, I mean, since we're having an open discussion here, I think definitely, if you're talking about economic incentives and the power of capital, and then you look at the various stakeholders within the capital markets, the role of big funds, institutional funds, asset owners are just so critical in today's age because of the way they can incentivize other players in the market, financial intermediaries and all that. So it's really about putting your money where your mouth is, and also going back to how you incentivize the financial industry players. I mean, we're talking about a topic on financial industry's commitment, but if you really strip it down to who can incentivize, what are the metrics that you're evaluating them on? Are they on a short-term perspective or on a longer-term perspective? Are you evaluating them on their ESG commitments, on their stewardship activities? Those play such a critical role in today's age. And when we did the asset management industry report, we actually partnered up with Nomura Institute of Capital Market Research to bring in the Japan's perspective. And we saw that, even though they had a lot of regulations around it, I think the asset owners, through the biggest pension fund, GPIF, they keep redesigning the way they evaluate the asset managers that they outsource the external funds to basically play such a bigger role in terms of their commitment towards ESG and sustainability. So yeah.
So Datin, sorry, I would like to add a little bit. Datin, I read news today, this morning, and our Minister YB KJ mentioned that Singapore got the first Pfizer BioNTech because Temasek invested in BioNTech. So you just imagine, 5 years ago, do you think the retail investors would appreciate the mRNA technology? You should start with the wisdom of institutional investors. I mean, they are blessed with resources, insights and access to information. So they would be in a better position to appreciate the opportunity that the new technology would bring, right, to humankind. So that's my point. I mean, we have a role to play to support this breakthrough technological advances to save humanity, to save our planet, right? It's a function of information.
Yeah, I mean, it's again the bigger picture is where does the state versus market play its role in terms of moving this agenda forward, right? So there is a space for public markets. Penjana Capital, for instance, is playing that role as well for the government sector, and then there is a space for the role of sovereign wealth funds, pension funds, and then there's a role for the market players, the intermediaries, and then there's businesses as well.
Look, extremely interesting, this conversation, especially where you brought into the mix there the government pension scheme or fund in Japan as well. So interestingly, in the news, they've announced that they're actually pulling back from ESG investing. I think within the details of that decision, there's a lot of issues that they've encountered in terms of short-term performance. Because of both the way that they've implemented ESG investing, which I think has been through the passive funds, but also through their mandate. So I think that's an extremely interesting contrast to the example of Temasek that you've just raised. So I think definitely it's not a one-size-fits-all regulation versus capital markets player issue. I do want to get to one more question, and then we do have a question from the audience. So I'll pose this to both of you, and whoever would like to take this up. Islamic finance and ESG investing. I mean, there's I guess, an understanding that Islamic finance incorporates a lot of environmental, social, governance issues within it. And so there's a commonality between the two. Do you see these two, I guess, flavors or threads of finance moving closer together going forward? And how do you think that that will actually occur?
I can start.
Yeah.
I mean,
Yeah.
I think from my perspective, and I agree, I think Tan Sri Wahid mentioned this as well, there's a greater degree of commonality rather than differences between Islamic finance and ESG investing. You can think of them as complementary approaches. I think Rafi mentioned something about Islamic finance has a broader perspective on the social front, but maybe less focus on the environmental front. And I think for Islamic finance, maybe it's not mentioned explicitly on the environmental factors, but if you look back at the core fundamental or the principles in terms of preservation of life as one of the Maqasid al-Sharia objectives, then it would be linked to the protection of the planet, of course. But there's traction already within the capital market space. You have issuances of green sukuks, SRI sukuk. So, but again, I think in the conversation, I think we can really look at how we move or shape markets in the future, especially for the post-pandemic environment. We have to take it from a bigger picture perspective. And I think the core fundamentals of Islamic finance, interestingly, if you unpack it in terms of how profit and risk must be shared to reduce inequities further, disapproval of short-term speculative trading. All financial transactions would have to be based on a real underlying asset. If you think about that, these are the same arguments for reforms in capitalism, which have emerged from post-global financial crisis, 2008, 2009, right? So this is the same questions which Taufik and yourself raised in terms of short-termism, in terms of the structural inequalities in our system. So this mainstream capitalism model that we are currently in, which has led to a disconnect, for instance, to financing real productive activities, are the same criticisms by a growing number of economists, academics, which are calling for one which is more based on a stakeholder model of capitalism, which links back to your SRI in ESG. So I think there's a saying, but I can't remember who said this. Capitalists knows how to grow the pie well, but they don't know how to divide the pie well. Socialists don't know how to grow the pie. So I think for Islamic finance and the way it's aligned for a more balanced approach between reaping the benefits of a market-based system, it still promotes entrepreneurship. It still promotes taking on productive investments longer term. It still promotes innovation, risk-taking and profit-taking, but at the same time, risk-sharing and profit-sharing, combined with its emphasis on generating social benefits. To me, it presents a unique opportunity for Islamic finance to come to the front and center today with COVID-19 to lay the foundations of a new model that we are all seeking for, which can also be the basis, like a framework or blueprint, which can lay the foundations for how SRI moves forward or ESG investing moves forward. So when we think about changing toward a new model of capitalism, I think it's interesting because, and Taufik, I'll relate to Taufik's interest in history. If you look back in history, the seeds of what we're seeing right now with shareholder maximization, maximizing shareholder profit maximizing, that kind of capitalism, actually the seeds of it, the idea actually had started in 1930s before it became mainstream into the 1970s. And so it's not a natural evolution. We might not have seen it coming in our lifetime when we are in the capital market industry, but it was driven by a set of political, economic, and business choices, which can and should be remade if it no longer serves our economy, it no longer serves our society, or it no longer serves our environment. So I think from a broader picture, I won't go into the details. I think even Tan Sri Wahid had gone into the parameters in terms of including the convergence of Islamic Shariah criteria into the FTSE for Good Bursa, the FTSE for Good Hijrah Sharia, right? So I think from a broader perspective, Islamic finance can actually lay the framework or become the blueprint for a new model.
Okay, great.
But I just would like to add that,
Sure.
I would like to, bring the attention before 1930. The classical economists, Adam Smith, Ricardo, recognized that land, labor, capital, there are three distinct factors of production. They don't mention that, okay, this one is, superior than the other. It's only that towards 20th century that there is an element of focus more towards labor and eventually capital after socialist system collapse. And entering 21st century, capital dominates. We just talk about financial economy. There's a detach between financial economy and real economy, right? I mean, talking back, answering your question here on Islamic finance, I think Islamic, is a way of life, is a deen, right? It's a framework. Similarly, classical economists believe that economy is an ecosystem. It's interdependent. So in Islamic concept, I think we have stakeholders, we have society. It's very foundational to the way we interact with one another. But currently, it's divisive. So we need to nurture its connection back. We need to give back trust in the system. Another one is businesses. It's supposed to be innovative, but when it is actually driven by short-termism, no. It limits the power of innovation. So we need to give them a purpose. Finance is a service, but now is a profit-making engine. So we need to bring back finance to its core. It's supposed to serve society. And lastly, it's a state. It's very essential on how they ensure all the complementers, agents work hand in hand. So it's very essential. And we have to make it accountable. We have to bring back governance. That's my comment.
No, thank you for your take on that. I'm going to ask Taufik the audience question, if you could answer it in I guess a few words. So the question here is: Singapore is looking to launch a global carbon exchange end of this year. Do you see such exchange as being suitable in Malaysia, and would the financial industry benefit from such an exchange?
Right. The concept is that we need pricing mechanism, right? Like I said, we all are driven by economic incentive. So, even in the private market, we have that problem, but we now have a secondary market for private capital, right? So because we need to have a proper pricing mechanism. So if you ask me, this is a real breakthrough towards mitigating a risk. We need to price those opportunities and to some extent, the externalities that it brings. So yeah, if you ask me, yes. Whether it's suitable for Malaysia, we have to look at the market infrastructure. So yeah, I'm not going to talk so much about that because I think Bursa would be in a better position to talk about the readiness of our infrastructure to have so-called carbon exchange in Malaysia. But I think, yeah, it is a step in the right direction. We need a proper economic incentive to drive behavior change.
Great. Okay. Thank you very much. So I think we're coming up to the end of our hour. It's been enormously entertaining for myself to hear such, I guess, strong views and passionate views. If I could perhaps summarize in terms of how COVID has impacted Malaysia and the market. Taufik, you've had a great view of history, and in terms of we need to look forward for the long term and really look at innovation and be a long-term player. And I think Datin Nazlin, you also pointed to the capital markets really being the solution for sustainability, and this really is being the only game in town. And I really liked your approach on that the capital markets need to be proactive around these types of issues. When we talked about climate change, a longer-term issue, which is impacting the nightly news right now, I think we talked about opportunities and innovation really driving those fundamental changes rather than regulation. And then I think finally, when we talked about Islamic, I think there was a great feeling that there's a lot of commonality and complementarity with ESG. And very much when we talk about the growth of ESG internationally, this can only also be, I guess, mirrored or even outpaced by the growth of Islamic finance that we see. So thank you very much to yourselves. I think it's really enjoyed this conversation. Thank you to our audience for your participation, and look forward to speaking with you again. Thank you.
Thank you,
Thank you very much.